Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is January 20th, 2023, and today is Friday morning. So looking at the highlights of the day, we've been watching this for quite some time and did mention it. Gold did get stronger for quite some time over the past 2 weeks, and sure enough, it's the one that took higher and broke out higher yesterday. Now, no major economic events scheduled for today, but as we look at the various markets, starting out with the Forex symbols, the dollar does weaken somewhat versus the major pairs, looking at the indices, the Dow Jones and the NASDAQ tapering off on low volume. Looking at commodities, gold gains as mentioned, and oil does bounce back above $80 a barrel. Now, looking at stocks, JP Morgan weakens. Now, that's a very important element. We're going to take a look at that in just a second. And lastly, looking at cryptocurrencies, Bitcoin still holding that 20K. So that is promising. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're looking at that Euro USD. We're at the top of that move, 108.45-ish level, right there, right there, right there, right there. And this is just showing us how strong it could get. Now, this is a point of contention, no question, but not enough. And the real point of contention is as we get to that round number, that 110, which would be a tremendous comeback for the Euro USD. Now, the GBP also trading close to its highs as it did taper off versus the dollar. The Australian dollar also tapering off its highs. The Canadian dollar did get a little bit stronger versus the US dollar, as you can see here. After that, the CPI number came out the other day where it really just weakened versus the dollar, but did gain some strength, some of that spike back. And usually it's a 50% comeback. So that's wasn't a 50% comeback, but it did somewhat come back. Okay, so that does happen when you have these type of spikes. When you have these type of spikes and then you have a 50% drop, just as a correctional move. So this is just real trading right now, and this is what you have to just compare with. Now, it's a very choppy environment. If you look at the graph, it's just pop, up and down. It's not going in one directional move. So that's very important. Now, as we look at the other majors, okay, looking at the Japanese yen, it did get a bit stronger versus the dollar, okay, but you could see that it's tapering off there to 129 as it's gone between 127 and 129. I believe we're going to be trading in a range right now. Okay, I don't think we're going to be breaking out higher, but that's something to look into. Now, looking at gold, this is where it's at. 1928 broke out higher, a nice little spike, hit 1938. That has been a number before, okay, where we've hit it several times in the past. Now we're getting closer to that 2000 level, and that is our breakout point. Okay, so really this is very, very important. If we look at a weekly chart, you can see it. I'm getting back to that 1996-ish area ever so carefully, but ever since we've been in that 1810-ish level, 1828, every time we broke up above it, that's a 100-point move right there. Now looking at crude oil, trading at $81 a barrel and just bouncing back. Now again, it's a very choppy market, granted. Okay, just keep that in mind. It is a choppy market right now. So just be aware of it. You want to play the levels, 82. I wouldn't even think to get short it at $82 because it's making higher highs. If you look at a daily, just looking like it's, maybe perking up at this area and just hanging around too far near its resistance area, and that usually is an indication that it's going to break out. But you want to keep an eye on volume today. Okay, that's going to be the telltale sign. Now, looking at the U.S. markets first, the Dow Jones, you could see it trading at 33,148. Whatever we gained this month, we've given back over the past couple of days. So that is where we're at. Now, looking at the NASDAQ also, all right, trading sideways and did retrace, but not as weak as I would have expected it. Okay, I would have expected it somewhere in the 10,800-ish level, but it's not, which is interesting. So there's a mixed bag. Not everything is going down all at the same time, so keep that in mind. Now, looking at the individual stocks, okay, there we go. So Apple's not going down. Okay, that's the one that's not going down. It's not going up, but it's not going down. JP Morgan is going down. Now, this is very important because JP Morgan was the one that carried us higher and higher and higher into the markets towards the end of the year. This was the one in October that really capitulated us into that 35,000-ish level. And sure enough, it's the one that is tapering off now. So this may be a point where it's changing that character and you got to stay focused on it and see if it continues selling off. If it does, then we're going to see it back in that 100-ish level. Okay, that could still be a case, so just keep that in mind. Now, lastly, looking at Cisco, this is something very, very dramatic for Cisco, going from $49 down to 46 bucks. That's a decent move on the downside. Not big volume, so I'm not carried away with it, but it did sell off quite aggressively. So it's, again, it's not across the board. There are individual stocks, so that's why the NASDAQ hasn't been going down, but that's something to pay note to. Now, lastly, looking at Bitcoin, hanging out, 20,920. So that is still holding its line. So keep that in mind today. This is Fred Razak. I want to wish you guys a great trading day and a beautiful weekend. Thank you.